This is a sample video to help with the budgeting of the promoter's budget for a concert. So there are 3 different levels that we'll look at. This is the first level. We did this in class to prepare you for this week's assignment. So this is a theater budget worksheet. We're using the Sanger downtown as an example. The assignment for this week is for a larger venue, which would be an arena of 10,000 seats. So it's a little bit more complex in terms of the numbers are just bigger, but the form and the process is exactly the same. Keep in mind this is a simplified example. In the real world, budgets like this would be done on Excel, for example, and maybe more itemized. When you look under Roman numeral 3 down here, you'll see this is pretty simplified, but it does give you an idea of how to go about calculating the cost of doing a show. Okay, now the goal of this is to determine whether or not you're going to accept this, if you're going to buy this show or not. So an agent is offering the terms above. So we're going to promote a Stevie Wonder concert at the Sanger. It's a 1,000-seat venue. The artist wants $30,000 flat guarantee. The Sanger has a $2 per ticket surcharge as well as a tax rate of 8.25%. We'll figure advertising at $3 a head. For reference, on page 138 and 139 of the text of the course textbook, we have another example of a budget like this. And so we're going to set the prices at $100 a ticket and find out whether or not it's viable to actually do a show, if we're going to lose money or make money, or how it's going to go. We'll remember that any profits should be figured on an 80-20 split, in which 80% goes to the artist. Okay, so the steps of doing this, we're going to start and just kind of go down Roman numeral 1, 2, 3, and 4. And then by the end of it, we'll decide whether or not we're going to accept the offer or not. And so let's get going here. So we know that the advertising is set on $3 a head, and so the total venue capacity is 1,000, and so that's going to get us to $3,000 there. The promoter's profit is going to be 15% of the break even, and so if you look down here, the break even is down here, so we can't fill that in just yet. So we'll move down. Ticket price is already in there at $100. And so in the second section here, we're going to figure out how much money the concert could possibly make, could possibly gross. That's with no expenses except for the taxes, and that's going to be the net potential. And then on this side, we're going to make a conservative estimate of how much the concert could make if the whole thing wasn't sold out. So if it sells out, that means every seat sells. So that's 1,000 seats at the ticket price of $100. So that should give us $100,000 here. And let's see, the tax rate we know is 8.25%. And so to figure out the taxes, you'll also notice that there are some formula here on the back. But to figure out the taxes, we need to convert that from a percentage, which would be 0.0825 times 100,000 times 100,000, and that's going to give us $8,250. 8250. Okay, so we can just leave 8250 in as our answer there. And then you'll notice that the net potential equation, so that's going to be a special equation here, so that's why I wanted to show you the back. We actually have to go down to find it. Net potential is going to be the gross potential divided by 1 plus the tax rate. And so the gross potential is 100,000 divided by 1, and then the tax rate is 0.0825. Right? So the equation here is 100,000 divided by 1.0825, and that's going to give us $92,378. 92,378. All right, so this is the maximum amount that we can hope to make once taxes are paid. And then we'll figure out the other costs down here. But we need to have the net potential here. And now on this side, we'll figure out what is a better sort of conservative or educated guess if we don't sell everything out, but we only sell out 65%, right, which is a good rule of thumb. And so if instead of selling all of the seats at $100, we only sell 65% of the seats at $100 each, what that will give us is going to be 65% of 1,000, which is 650 times 100, and that'll be $65,000 there. And then we'll need to figure the estimated net here. And so we do the exact same thing we did for the net potential on this side, except we use 65,000 instead of 100,000. So to verify that, you look on the back, estimated gross divided by 1 plus the tax rate. So that's going to be 65,000 divided by 1 plus the tax rate 0.0825, and that will give us $60,046. $60,046. All right, and now we've got something that is a ballpark range. So we could net, which is after taxes, either somewhere between $92,000 in ticket sales to $60,000. So that's about a $32,000 swing there, based on 100% sellout versus 65% sellout. Okay, so that's our that's the biggest pot of money that we can use to do this thing. So let's see if we can pay for everything. Okay, so in this section, we're going to use the following along with the artist guarantee and advertising costs. Okay, so don't forget to put those two in. All right, so first of all, we can see that the hospitality, security, and crew are coming in at $2,500, sound and lights at $3,000, insurance at $2,500. The venue rental is $2,000. The venue ticket surcharge is $2 per ticket. We're going to put that at every ticket. So that would be $2,000. So that's going to be $5,000, $10,000, $12,000. And then we want to figure, we have to add advertising and the artist guarantee. So we go up to advertising, and that's $3,000. So it's going to give us $15,000 on top of the artist guarantee, which is $30,000. So that'll give us $45,000. And that is our fixed subtotal. Now, for the fixed subtotal, that will allow us to figure out the break-even point, and that's the point at which the show pays for itself. And then that also will allow us to figure out how much we can pay ourselves as the promoter, right? The promoter's profit on the show. That's going to be 15% of the break-even. So how do we figure out what the break-even point is? So we look on the bottom. Hopefully there it is, break-even point. So that's the fixed subtotal plus the taxes. All right, fixed subtotal, $45,000 plus 8,250, and that will give us $53,250. And now we can figure out the split point and the break-even point. I'm sorry, the promoter's profit. So let's do that first. 53,000 times 0.15 is going to give us almost $8,000. So $7,987. $7,987. Not bad for one night's show. Of course, we know that the promoter does a lot to get to that point. $7,987, and then adding that to the break-even point should give us our split point. Let's verify that. Split point equals break-even plus promoter's profit. So we take the $53,000 and change and add it to the almost $8,000, and that will give us our split point, which is $61,237. Okay, so why do we call it a split point? That's because any money that's raised in excess of this, anything above that, will be split along the industry standard of 80-20 split. 80% of the profit goes to the artist, 20% of the profit goes to the promoter. Now, this is an important point to kind of stop for a second and look at the big picture, because we've been in the details of all of these numbers. And so we want to look at the split point and see, is it less than the estimated net, right? We know that it's definitely less than the estimated the net potential, which would be all of the ticket sales. But if they only do the 65% of all of the seats sell, then you can see that it's going to cost more to put on the show and pay the promoter than we'll actually make. And so we need to be aware of that. In other words, that money is going to have to come from somewhere. And where it's going to come from is the promoter's payout. So now let's look at how much the artist could make if 100% of the sales of the tickets sell, how much the artist could make if only 65% of the tickets sell, and that's going to give us a range of possible future scenarios, and then how much the promoter will make if all of the tickets sell, and how much the promoter will make if only 65% of the tickets sell. Remember, there's going to be a loss of some money, and that's going to be taken out of the promoter's pay in this scenario here. Because if 65% of the tickets sell, we have a shortfall of about $1,000 or so. All right, so let's start with the artist. How much could they possibly make? All right, on the back, you'll see that the walkout potential is the artist's guarantee, right? So that's $30,000 plus 80% of profit above the split point, right? So how do you figure out what the profit is above the split point? That's going to be the net potential minus the split point. So let's go, and that's what this area is for, this profit margin worksheet area. So the net potential minus the split point. Net potential is 92,378. 92,378 minus the split point, which is down here, 61,237. 61,237, and that's going to give us a maximum profit of $31,141. And now that's what you take and split 80% and 20%. Okay, so let's do that. So 31,141 times 0.8 is going to give us 24,912, and then the exact same thing, 20% of 31,000 times 0.2 will give us $6,228 equals 6,228. Okay, so that's our best case scenario. This going to the artist and this going to the promoter. So what we can do now is say the max potential for the artist is 30,000 plus 24,912, and that's going to get us to 54,912. Pretty good payday. And the promoter's potential is going to be this $6,228 on top of their pay, $7,987. $7,987 plus 6,228 equals $14,215. Okay, that for one person. Nice work. Okay, now let's do the other scenario where we're going to use not the maximum potential, but the 65% estimated money. Okay, you remember that's the estimated pot of money that exists. So how do we figure out the estimated profit? All right, so we want to go down. Hold on a second. So the estimated profit equation is here. Estimated net, which is 60,046, minus the split point, all right, is going to reveal a negative number. So that's a money loss. So how much is actually lost? So if you take 60,000 and subtract 61,000, that's going to give us a negative balance of 191 or 1191. Okay, so this loss of money is not going to be the artist is not going to be impacted by this. All right, this is the promoter's deal. If they accept the show or not. Remember, that's the purpose of all these figuring is, are we going to accept this show? So instead of losing money, the artist is just going to make their guarantee and walk away. Right, $30,000. Where the money loss is going to show up is here. The promoter's estimated walkout will be their pay, $7,987, but minus the 1191. And so that's going to turn into 6,900 or $796. And so instead of working for 15%, so this is a loss, a significant loss. So the promoter accepting the show is ballparking making between $14,000 and about $7,000, which is a pretty big difference. But that's what we have to decide, and so that's where we have the last question. We, as the promoters, do we accept the offer on these terms or do we decline the offer? Why? Is a slightly less of a percentage worth it, or do you have to have your full $8,000 to do this? In other words, will you accept $1,000 less than what you could possibly make just to do this show? Right? Is it that important to you? Growing your brand? Is it important to the community, etc.? Okay, so that's how to do these budget worksheets. You can use this as an example to follow in order to finish the one for this week, which is an arena. Email me with any questions you have, and Good luck.